All right, let's talk about one of the most confusing, most interesting companies on the market right now, Oracle. For years, you probably thought of it as a bit of a tech dinosaur, right? Kind of slow, kind of boring. But suddenly, it's right at the heart of the AI boom, and its story has become this incredible paradox. So let's dive in and try to make sense of it.
So here's the puzzle in a nutshell. On one side, you've got a balance sheet that would make any traditional investor just run for the hills. We're talking about debt that exceeds assets by over $80 billion. Yikes. But on the other side, you have this explosive growth signal. Management says their most important division, the cloud business, is going to grow by a whopping 77% this year. That is just a crazy number.
So what is going on here? Is Oracle a financial house of cards just waiting to collapse? Or is it secretly building the entire foundation for the next wave of AI? That is the mystery we are going to unpack today. And we're going to start with all the reasons you might want to be very, very cautious. Okay, to really get the risk here, let's put on our skeptical investor hat for a minute. You know, think like a Benjamin Graham type, someone who puts financial safety above everything else. When you look at Oracle through that old school lens, well, the picture is not pretty. The numbers really tell the story here. Take a look at the liquidity ratio. This basically just asks, can the company pay its bills in the short term? Oracle's is at 0.62. A really safe company, according to Graham, should be over 2.0. That's a huge warning sign. But it gets worse. The company's long-term debt is way, way bigger than its working capital, which is already negative. From a traditional point of view, these are massive flashing red lights. And here's where you can feel the pressure in real time. In just the last 3 months, Oracle burned through $362 million of cash. That is the direct cost of its gigantic bet on AI. They're spending an absolute fortune on building out data centers and infrastructure. You can literally see the risk right there in the cash flow.
So, if we just stop the story right here, the conclusion would be pretty simple. Oracle looks like a super risky bet. Its survival completely depends on making a ton of money in the future to pay off all this debt. A conservative investor would probably just close the book and walk away.
But, and this is a huge but, that is only half the story. Because Oracle's management is telling a completely different tale. It's an audacious, exciting narrative that they believe makes all those scary numbers totally irrelevant. And here's the core of their argument, coming straight from the founder, Larry Ellison. He's saying, look, the biggest problem in AI right now isn't the software, it's the hardware. There is a massive global shortage of the raw computing power you need to train these things. And his claim is that Oracle, and only Oracle, can build the infrastructure to solve this problem faster and cheaper than anyone else.
Now, to prove this isn't just talk, they point to one number. It's called RPO, or Remaining Performance Obligations. This is a super important term to get. Just think of it as a company's sales backlog, but it's legally binding. This isn't some hopeful sales forecast. It's the total dollar value of contracts they have already signed with customers for work they haven't delivered yet. And Oracle's RPO, are you ready for this? It is $455 billion. Let that sink in. This isn't a maybe. These are signed, sealed contracts with the biggest players in the AI game. We're talking OpenAI, Elon Musk's xAI, Meta, even the chipkin NVIDIA. They've all signed these massive, multi-billion-dollar deals to essentially reserve Oracle's cloud capacity for years to come. And that enormous backlog, that's the reason why Wall Street is suddenly willing to completely ignore that messy balance sheet and Oracle's slow growth past. Investors aren't looking at the old Oracle anymore. They're valuing it based on this brand new, AI-powered future that is literally already under contract. You can see this change perfectly in the stock's valuation. Historically, Oracle's price-to-earnings ratio, a basic measure of how expensive a stock is, hovered around 24. Well, today, investors are paying almost 47 times its earnings. That's nearly double. It's Mr. Market basically screaming, I believe the AI growth story. So, does paying this high price today even make sense? Well, let's do some quick back-of-the-napkin math on what the future could look like. Analysts think Oracle could be earning over $20 per share in about 5 years. Now, if you give it a new PE multiple of, say, 32, which is pretty normal for a high-growth tech company, that gets you to a potential stock price of over $640. From today's price, that's a potential return of around 14.5% per year.
So how in the world do we square this? You got a terrifying balance sheet on one side and this incredible contract-backed growth story on the other. Well, it all comes down to totally rethinking what we mean by safety when we look at an investment like this.
The old-school margin of safety, the kind Benjamin Graham loved, came from a rock-solid balance sheet with very little debt. Simple. But the argument for Oracle today proposes a totally new kind of safety. Here, the safety doesn't come from the assets the company already has. It comes from the $455 billion in future revenue that it has already locked in with legally binding contracts.
So let's just wrap this whole paradox up. On the one hand, yes, Oracle's traditional financial health looks weak. That's a real risk. But on the other hand, it has pulled off an incredible pivot, securing this historic backlog of AI contracts. Because of that, the market sees it in a completely new light. And so the risk is totally shifted. The big question isn't, will Oracle go broke anymore? The question now is, can they actually build all the stuff they promised?
And that's really what it all comes down to. This is the one question that matters for Oracle's future. The demand is there, the contracts are signed, the money is waiting. Oracle's success is no longer about financial engineering. It's about actual, real-world engineering. Can they execute? It is a massive, massive bet, and believe me, the entire world is watching to see if they can pull it off.